Good morning, everyone, and welcome back to Morning Markets, where the team at True Potential discuss key things from asset markets over the past 24 hours. Today, we'll look at equity market performance yesterday and comment on some economic activity in the US and Europe. So firstly, asset markets yesterday had a better day, particularly equity markets, where we saw in the US the Nasdaq up 2.3% on the day, and in the case of Europe, the Euro Stoxx 600 up about 0.8% over the course of yesterday. In a large part, this has been driven by positive sentiment, and that positive sentiment is coming, in my view, from what's happening in the US, with the discussions between the Republicans and the Democrats moving towards some form of further fiscal support, fiscal stimulus, with Nancy Pelosi yesterday suggesting that they continue to work on the bones of the agreement that they can put in place. So that is clearly supporting sentiment. And one of the other areas where that improvement is evident and was evident yesterday was in the US bond market, in particular the sovereign bond market, where we saw the US 10-year yield move out from that 71 basis points where it's been sitting for the past number of days to 77 basis points in the day, and also at the longer end of the curve, so the 30-year US Treasury, we saw that move up as well, and move up further than the 10-year, suggesting that the yield curve is steepening, which is a positive from an economic activity point of view. So that, I think, definitely fed into sentiment yesterday. I think the other thing to touch on is just some of the economic data that we had yesterday from both Europe and the US. In the case of Europe, we had retail sales data which showed continued improvement in retail activity, improving 4.4%, I should say, month on month for August. That's great to see. It does suggest that there is recovery ongoing in Europe. What we need to really see is that being sustained over the coming months, and we know that that will be challenged to an extent given the backdrop of rising COVID-19 infection rates. To put some context around that, whilst we're seeing month-on-month improvement, retail activity in Europe still remains down some 14% year on year. So that's what we need to make up to get back to pre-COVID levels. Also yesterday, we did get some indication of a slight softening in activity with the ISM services data, or the PMI, I should say, in Europe, coming out for services, which was a little lower than expected and did show a degree of contraction in a number of economies. The standout in that has been Germany. Germany continues to move forward on a positive trajectory, and we see that today in industrial orders as well. Now, one of the key differences there with Germany and its southern European counterparts is the importance of the manufacturing economy within Germany, which, as we've seen with PMIs on the manufacturing side, continues to recover, and that's playing out in this difference in performance that we're seeing between the German economy and that of its southern European counterparts. On the ISM side, we had services data there in the US, which continue to show an improvement in activity from that level of August. So ongoing momentum there, albeit the rate of change slowing. The other interesting component of that was when we dig into it, we can see that the employment side of things looks more positive than it did last month, with hiring intentions more favourable, which I suppose does contrast a little bit with what we're seeing in the broader unemployment data trend. So something there to potentially watch over the coming weeks and months to see if unemployment levels continue to drop and we see that pick up in hiring feeding its way through. That's it for today. Please join us again tomorrow. Many thanks.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.